السلام عليكم، مساكم الله بالخير جميعا اخوان. ماري كم الاتندنس هني عندنا؟ 43 اتندنس في مجلسكم. اهلا وسهلا فيكم في اول مجلس اسبوعي للقطاعات في غرفة التجارة بيت التجار، وحياكم الله. يا ريت نشوفكم فيزيكلي. I hope everybody keeping safe. سونيا مرحبا، كيف حالك؟ شلونك؟ متغيرة علينا اشوف شوي. ايش صاير؟ Ladies and gentlemen, thank you very much for attending this Majlis for the Chamber of Commerce. I would like to welcome everybody for in our first Majlis sector for the Financials and Taxation Committee here in Bahrain, to basically in the chamber to discuss matters that are arising regarding financial and taxation matters, and most probably I think there is a lot of hot subjects going on we have these days due to the pandemic of the corona and the effect of the economy, effect of the pandemic on the economy of Bahrain, and the way that we have our government has managed to reduce the negative effect on the economy by stimulus plans, and special thanks for our financial institution, private sector financial institution, that really showed their patriotic position and national love of Bahrain by helping out the business communities and the people of Bahrain to postpone the loans for 6 months without interest, and the other extensions that has been done for 3 months and further 3 months for borrowers with interest, that has really has contributed to reduce the risk of closures of a lot of institutions and businesses in Bahrain. Well, we hope this pandemic gets over soon and go back into a recovery phase to bring back the economy to its past glories, which I think is going to be a challenge for the next, I think, few years. And I'd like to keep the floor open. We have our chairman of the Finance and Taxation Committee, Mrs. Sausan Abul Hassan. She will give a word. And we have on my left the CEO of the Chamber of Commerce, Mr. Shakir al-Shatter. These are all experts in financial institution, and I have my first deputy here, Mr. Khalid Najibi. They're all bankers, except me. I'm a contractor. I'll give the floor to you.
Thank you very much.
Thank you.
Thank you, Mr. Chairman, for your valuable opening, and it's our honor to be here today with the first E.Majlis at Bahrain Chamber. Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon, ladies and gentlemen. It's our privilege and pleasure to have you all here today. And on behalf of Finance, Insurance and Tax Committee, we would like to welcome you all. Before we begin, I would like to thank everyone who contributed in bringing up this E.Majlis, whereby we all work together for the benefit of the members of the Chamber. Mr. Chairman has highlighted the pandemic and its effect. As you're aware, the COVID-19 pandemic is considered to be the largest public health crisis globally that resulted in the major crisis in the economy. And this affected all of the countries. We have noticed there has been like a reduction in the production, reduction in the consumption due to the fear and the uncertainty by the end consumers. And there have been also the volatility in the stock markets that affected negatively the financial sector as well. In June 2020, there has been a report that was issued by the Organization of Economic Cooperation and Development, in which they have projected there is going to be a drop by 6% in the global GDP. And in Bahrain, Ministry of Finance has issued its first report in Q1 2020, in which it showed that Bahrain GDP has dropped by 1.1%. And this is not only Bahrain, we're talking about the global and the region as well. If we look at the pandemic, the most business that was affected was the small and medium enterprises. So in our first E.Majlis, we are going to direct our, let's say, whatever we are going to have in terms of options and so on will be targeted to the SMEs. There are several ways that the pandemic affected the economy, whether from the supply side or from the demand. On the supply, there has been shortage in the labor, and mostly this was due to the social distancing and the implementation of the measures to contain the disease. There has been also an effect on the supply chain, especially with the issues that we faced on the transportation between the countries. And the SMEs were affected whenever they were unable to get the, let's say, the major products or even the intermediary products. On the demand side, there was a dramatic drop in the revenues of the SMEs due to the low demand from the consumers. And as I mentioned before, it was mainly due to the uncertainty and the fear of what's going to happen next. So this affected the financial position of the SMEs and caused the shortage and liquidity. On another side, financial sector was also affected. So what happened is that they became conservative and, let's say, risk averse and granting more credit to the corporates, especially the SMEs, given their small size. SMEs are considered to be less flexible when it comes to the cost. And with the pandemic, companies have to move to other options rather than the physical option, especially the technology. And definitely this would result in more cost by the SME. Now, given the financial difficulties that SMEs are facing, we hereby are going to shed light on the different options that the SMEs would have rather than the traditional way of continuing their business and strengthening it. So we are going to touch base on the reorganization under the bankruptcy law and the option of the merger and acquisition. So we are delighted to have here our speakers who are going to share their expertise with us today. We have Dr. Jamil Al-Alawi, Senior Legal Advisor at Economic Development Board. We have Ms. Fatima Al-Ali, Partner at Hassan Radi and Associate. Mr. Narayana Ramchandran, Partner and Head of Advisory at KPMG. Dear audiences, once we are done with the presentations, then we will leave the floor open for any question via the chat and raising hand. Thank you very much for everyone. And Dr. Jamil, the floor is yours. Thank you.
Thank you very much, Sausan. Can you hear me?
Yes.
Okay. Thank you very much. This is the second event on reorganization, which the Chamber had kindly organized. In the first event, it was dedicated to reorganization, and we walked the audience through the law from the beginning to the end in some details. Today, we are going to touch on some of the probably the most important aspects of the law and the process. Now, as Sausan said, it's a challenging time for business. Some businesses definitely finding it hard to survive. Some, unfortunately, would have to liquidate. But I guess for so many, there is the option of being reorganized. And fortunately, we have a state-of-the-art reorganization law. And I say state-of-the-art, I'm not patronizing here. I think it's enough to point out to the World Bank Doing Business report of 2020, where Bahrain legislation for reorganization and bankruptcy achieved the highest score in the MENA region. And since the issuance of that report, Bahrain, in fact, just 2 months ago, introduced more enhancements to the law. So it is even now better. So we expect a better score this year for 2021. Now, if you are contemplating reorganization, I would say it is very important to really seek advice. And I'm not saying here legal advice. I would suggest that you really seek some technical and expert advice on reorganization. You seek advice of a firm who has a track record in this field, and a firm who really knows the toolkit well to enable you to go through the process successfully, because that can make a big difference to your experience. Yes, seeking advice of a specialist firm has its cost, certainly, but I think you could be well rewarded for the money you spend on seeking advice of a firm who is experienced in restructuring and reorganization. In addition to seeking legal advice and technical advice, it is also important to apply for reorganization as early as possible. Seeking reorganization early can make a world of difference. Sometimes you leave it too late, and by that time, you have left some of your coveted assets, and some of your assets probably deteriorated in value. You've lost some of your coveted customers, important customers, and you lost some of your important revenue streams. And probably by the time you go to the court for reorganization, you have bled quite a lot of cash that your chances of survival becomes very much diminished. So it's important that you go for reorganization as early as possible. Now, of course, it is understandable that some businesses are reluctant to go to the court for reorganization, because it means really that they would lose some of their standing in the community, would lose some of their prestige, would lose some of their goodwill. And going to the court for reorganization would mean that a lot of their transaction would have to be exposed to the public, and some of their balance sheets and whatever would have to be open. So there is really a price to pay when you go to the court for reorganization. And this really explains the reluctance of some businesses to really go through that route. And probably because of this, the law allows the creditors to apply for reorganization their debtor. because of the reluctance of the debtor to go to the reorganization. But this is not really the only reason for creditors to seek reorganization of their debtor through the court. There are many reasons. One of them, probably these creditors would not know really the financial position of their debtor. And by going to the court and seeking his reorganization, his balance sheet would be exposed and his financial situation would be exposed. And they would probably be able to force him to pay if they go to the court and seek reorganization. One more reason that I would cite here for why creditors would go to the court for reorganization of their creditor is that it would probably be cheaper for them to seek his reorganization rather than them to go individually to the court and sue him for their debt. The court fees is less, and even the lawyer's fees and the expert fees would be less because there would be one lawyer involved, one expert appointed by the court, one expertise appointed, one trustee appointed by the court to look into the entire claims against the creditor or against the debtor. So sometimes, this is really cheaper and more viable for the creditors to do. Now, some would say, why do I have to go to the court for being reorganized? I probably have done some reorganization. I reorganized my business in the past, and I know my business best. So why do I have to go to the court? Well, there are a number of advantages why you would really opt to go to the court for reorganization. Probably the most important, the paramount reason why you would go to the court for reorganization is that you would get an automatic stay of all legal proceedings against you. You would get protection from your creditors. And for a business, sometimes this is very important. You would get a respite from all the harassments that you are getting from your creditors, because there would be this automatic stay of legal proceedings against you. As soon as the court accepts to open the reorganization proceedings, all these legal proceedings against you will stay, and you will be stayed, and you would be able to concentrate on your business. You would be able to concentrate on reorganizing your business. I mean, of course, this stay is not forever, at least for the secured debts that you have. But for the unsecured, that would stay until the reorganization plan is approved. And depending on the terms of the organization plan, the stay would probably continue. But there are many reasons, many benefits that you would get by going to the court for reorganization. So one of them is you would be able to repudiate the contracts that are not favorable to you and those that are burdensome. You can simply, of course, through the trustee, you would repudiate these contracts, and what will happen is that the other parties to the contract would have to join the other unsecured creditors for the rights they have against you. You would also avoid having your assets being dismembered in piecemeal fashion by your creditors. And these creditors would be after you if you are not in the court for reorganization. They would be after your assets. They would be putting attachments. They would be asking for them to be repositioned. They would be asking for them to be sold. And you would be deprived of some of your very important assets. And probably once you lose some of these assets, it would be difficult for you to continue in business. And of course, through the reorganization plan, which hopefully would be approved by the creditors, you would be able to reschedule your debts. You would be able to agree a certain payment plan, and some of your creditors would agree possibly some haircut to their credit. You would also be able to avoid the accelerated obligations kicking in. So for instance, you'd probably have a loan, and the terms of the loan would say that if you don't pay any of the installments, then all the installments would become due. Well, in the court, that the reorganization, this will not fly. You'd be able to avoid these sort of arrangements. Also, if you're having financial difficulties, it would be almost impossible for you to seek finance. Not many banks would be able to lend you money. You're having difficult time, and probably you would have some assets which you have already put as collateral. So your financial situation would not be very good. Your credit position would not be very good. But if you go through reorganization under the court would be able to authorize the trustee to borrow from banks under terms which are extremely favorable. Of course, the court would have to be satisfied that is in the best interest of the bankruptcy estate. So the banks who would lend you would become would have super priority as far as their position is concerned. They would enjoy probably a preferential interest rate, who would enjoy many advantages compared to the other creditors. So the law make it really possible for you to seek finance after you go to the court for reorganization. Of course, if it means that that would make the difference between you continuing in business and going for liquidation. One more advantage of going to the court for reorganization is that you would be able to bring all your creditors in one forum and negotiate with them together on certain reorganization plan. I mean, of course, quite a lot of this would have to be done through the trustee that the court would open. So these trustees, well, we call them trustees, we call them administrators. In Arabic, we call them Umana al-Taflisa. So Amin al-Taflisa is licensed by the Ministry of Justice. These trustees attend certain courses to qualify. They'd have to attend for interviews. And they can be engineers, they can be accountants, they can be people with specialties in management. The expertise here is extremely important, and for reorganization, I would say it is much better really for the person who would be your trustee to have experience in your business. I'm very skeptical of just plain vanilla accountants being appointed as reorganization trustees. You appoint an accountant with no expertise in your business, so maybe your business is catering or contracting or manufacturing and whatever. So ideally, you want a trustee who knows this business, who has experience in this business. And for this reason, the law requires the Ministry of Justice to publish the CVs of the trustees to make them available to the public. That would enable the creditors to choose the right trustee, and even if the court appointed trustee, which is not very suitable, the creditors would be able to go to his CV and find out and maybe point out to the court that based on his CV, this guy is not really suitable. But the law very much leaves the selection of the trustee to the creditors themselves. So although the court would have power initially to appoint a provisional trustee, as soon as the court accepts to open the reorganization proceedings, the creditors would be invited to come and vote on the selection of a trustee. And at that stage, because the debts are not all ascertained, or at least in value are not ascertained, so the selection would be by the creditors, one man, one vote, irrespective of how much is his credit. But later on, after the credits all the debts are ascertained, the creditors through the creditors committee would be able to select another creditor, either through the creditors committee or a creditors holding 2/3 of the debts would be able to select a creditor, and then they would go to the court for the appointment of this new creditor. But even after that, the creditor is selected and appointed, the creditors would always be able to go to the court and ask for this creditors to be replaced if it is found out that he's not efficient, he's not competent, or he has conflict of interest. They would also be able to go to the court for for the court to appoint an additional trustee beside the trustee that has already been selected and appointed. So as I said, even if this trustee is appointed, he can be replaced or even supplemented with additional trustee. This is very much in the spirit of the law, the need to maximize the value of the insolvency estate. It's really about the estate being maximized in value, because that would really increase the chances of the debtor being reorganized. And even if he is not reorganized and the business would have to go through liquidation, at least the value would have been maximized, and the creditors would be able to get a larger percentage of their debts. So and not only that, but also it's very much in the spirit of the law for the business to be revived whenever it's possible. The liquidation of the trustee is the last alternative that the trustee and the court should consider. The revival of the business is a priority. And the reorganization, and through the reorganization plan, very much leaves the door for mergers and acquisitions to take place. Sometimes even not through the reorganization plan, because that can take time. Sometimes the court can even accept the acquisition of certain assets of the creditor to be sold in the initial stages before even the reorganization plan is considered. This, for instance, happened in 2008 in the United States with Lehman Brothers, when very much in the early stages, the court accepted the sale of the much coveted arm of the Lehman Brothers, that was the brokerage business, to be sold for quite a handsome of money. Sometimes it's important really to sell, some businesses very early before, they become useless. So that was a main consideration of the U.S. court at that time for the sale of part of Lehman Brothers. In India, for instance, I say India because I came across some statistics about India recently. India introduced their bankruptcy law in 2016, and just within 2 years, $14.3 billion worth of business distressed assets was sold. And in India, the trend since 2008 was really very exponential as far as the sale of distressed assets was concerned, especially that the Indian law was amended maybe 3 or 4 times to make it even better for these transactions to take place. So, selling these assets, distressed assets, they revive these assets, or at least maintain them. They enable them to continue to be productive and to continue to contribute to the economy. One aspect of the law is the facilitation of changing hands of assets when the asset is really has a certain liens or some creditor's right associates with it. The law enables the assets to be sold free of liens and free of other rights. It depends whether it is secured or unsecured. And without this provision, really, it would sometimes be impossible for some of these assets, which are encumbered with other rights, to be sold if they are not really in the reorganization process. I took maybe more than my quota of the time. Now I would hand over to my able colleague Fatima Al-Ali to touch on some other aspects of the law. Thank you very much.
Thank you very much, Dr. Jamil. That was a very good introduction and overview of the law and its role really in the economy and in support of the SMEs, especially all businesses, but especially the SMEs. The bankruptcy law is issued with a view of supporting distressed businesses, maintaining them as a going concern and assisting in their recovery, and only resorting to liquidation where there is no other choice. And Dr. Jamil has very rightfully also explained the focus on the maximization of the value of the reorganization estate. And a key means to achieving that is by a very well-drafted reorganization plan, which is the heart arguably of the implementation of this law. And it's the reorganization plan is made with the purpose of maximizing the value of the debtor's assets to ensure creditor repayment and salvage of the business. The reorganization plan is usually prepared by the trustee, who has the role of assessing the debts and assets and coming up with the reorganization plan. But then there's also a role for the creditor committee, who's to liaise with the trustee in the drafting of the plan, and also the rest of the creditors to vote on the plan. And there is a majority requirement to ensure equal representation of all creditors. So the majority required for creditor votes is all categories of creditors, and within each category, a 2/3 majority of claims. And finally, there's the role of the court, which is to ratify the plan and to oversee its implementation. And there's also another option whereby there's more input from the debtor, and that is a pre-arranged reorganization plan. And that's where the debtor approaches the court with a plan that has already been discussed and agreed with the creditors. And in that case, the trustee's role would be limited to the implementation of that pre-arranged plan. And then once the plan is ratified by the court, the assets are under the control of the trustee, and the debtor is absolved of liability unless the plan states otherwise. And there are limited cases in which the trustee would have the authority to take urgent and expedited decisions without seeking the prior approval of the creditors or the court. And this is really to maintain the efficiency of the process and to also serve the purpose of value maximization. This has to be justified for that purpose. And that is such as the sale of a property that may be destroyed, damaged, or depreciated in value, or if a counterparty to a contract requests an urgent decision on the fate of the contract. And the use of this authority is subject to post-notification to the court. There's also nullifiable transactions, and basically those are transactions that are not in line with the value, with the purpose of value maximization, and therefore subject to nullification by the trustee. And that is also subject to court ratification. And this is, we'd be considering transactions that are fraudulent or harmful to the estate, or those that don't yield any advantage or any positive outcome for the estate. And then, of course, the whole purpose is to repay the debts, and there's a whole order of priority for the repayment of debts that is very clearly listed in the law. And since this is a very brief overview, I don't think we will delve into that in more details. It's quite a detailed list of how the repayment of debts should be prioritized. And if that fails, then the court can decide to turn the reorganization proceedings to liquidation proceedings. So that option is always available. But if the plan does succeed and is duly implemented, then the proceedings are finalized and the debtor is absolved of all debts. Another notable feature of the law is the accessibility of the proceedings to foreign creditors, who may apply as creditors or may be notified in their relevant jurisdictions, and then they would be subject to equal treatment to creditors in Bahrain. And just to give a main features overview, as opposed to the old law, the new law or the current law perceives and treats the debtor as a disrupted business, which requires assistance to recover. and it aims to help the business to continue as a going concern, favoring always reorganization and resorting to liquidation only if there is no other choice. And the focus is to consider the interests of all parties, debtors, creditors, and other interested parties, whereas the old law focuses mainly on the interests of the creditors and settling claims of creditors. So this is a whole different approach, and one where the creditor, the debtor, and an experienced trustee, as well as all overseen by the court, of course, have an input in how the estate will be managed and how to yield the most optimum result. So this is my brief overview. I think we now move on to KPMG with our friend Ramachandran.
Thank you, Fatima. Hello, can you hear me?
We can, yes, Ram.
Okay. First of all, I think the Chamber of Commerce and the E.Majlis conveners, thank you for the opportunity to present. I think I've been asked to speak on mergers and acquisition. Obviously, the topic in itself is quite wide. I'll try to narrow it down as I go forward with my presentation in the context of the current challenges we're all faced with. So what I'll do is I've got a presentation. If I'll share that screen with you, if you give me a second, can you just allow me to share my screen? Anyway, if I can't share the screen, it doesn't matter. I mean, I thought I could just show you a little bit of context to what I'm about to be talking about. I think I need to be enabled to share the screen. I think it's disabled at the moment. I'm sorry. It's can you allow this to happen? To be able to share? All right. So anyway, never mind if it can't be shared. Let me just maybe quickly roll through and then connect it to the reorganization story. I think leave the slides aside. I think that doesn't matter. The key thing on M&A is it's one of the options that every business is compelled to consider. I'll lay out some context on what has happened in our markets in the recent past and more so in the recent times, if you like. There's been a lot of activity in the M&A space, but most of that activity, I must say, is more of external kind of money from the region going into M&A activity or acquisitions in other parts of the world. Now that's interesting, but perhaps not totally relevant to the context of today's conversation. So if I look at the value and volume of deals that are taking place, a lot of them is still a bit of outflow. And in terms of inflow and M&A, there are certain sectors which are a little more active, if I might say, compared to other sectors. If I look at the volume of deals and value where activity is currently taking place, whether the money is coming from within the region or it is cross-border or it is some of these are international, they are largely around financial services for sure. There are some deals in the utility space, industrials, and some in insurance. So I think in the context of insurance and banking, it is important to say there is a lot of cross-border activity. When you cross-border as well as, I would say, aggregation within or consolidation within the market. Now, one of the main things in look at saying, what are the drivers to the M&A today? If you look at what are the drivers to the M&A, particularly in the sectors, and while it's applicable to the financial services or insurance or telecom, it is simply the scale, size, the competition that is forcing you to become far more sort of agile or in terms of scale, presence, and if not anything else, the resources that you need to be able to invest in technology and capabilities to be able to sustain and maintain your margins, or even perhaps to grow. So M&A, while in the past, if I look back in history, there was always 10 years ago, if you read most of the balance sheets of all the listed entities across the region, no different to Bahrain, M&A would always be stated as an important option in the chairman's statement and many other places, but it never got the action in terms of doing some of these deals. But now in the last 3 to 5 years, particularly the FS sector, if I might say, there's a huge amount of consolidation that has happened. First type of consolidation that's happening is within the country. Now, if you look at what has happened in Abu Dhabi, if you look at Dubai, if you look at what is happening in Saudi, and then there were some cross-border deals and some within our own market in Bahrain, and some cross-border deals, whether the deal got concluded or not, but substantial interest to scale up and increase presence, and also economies of scale on cost optimization as well, which becomes important in the M&A context. But if I kind of take a little bit of a couple of minutes just to kind of explain, saying one of the reasons, of course, while my colleagues who have just explained to you about reorganization, which is M&A in a very difficult time, I'll just talk of M&A also in the good times. Now, M&A, there are many times when you say, why does a deal succeed or why does a deal fail? Now, a deal succeeds when it's very clear saying the objective of the M&A is clearly defined. You know for sure why you're doing the deal, what is the benefit you wish to seek out of it, and what is it that you see when the combined entity comes together. Now, many a times what we see is in M&A sometimes is the thinking of what happens after the deal is done, because the deal making is all about a lot about price, negotiations, and it gets into what I might call getting the deal done. But real issue is saying if a deal is being pursued, the outcome post deal needs a reasonable amount of thinking as to why you're doing this deal, what do you expect to achieve out of it. People talk of synergies, but many a time, most of the synergy thinking stops at rationalizing costs, reducing or improving efficiency for sure. But the synergy in terms of saying what more can you do needs a reasonable amount of thinking so that the objective of that M&A is achieved. And we find that in some cases, most the way the M&A deals don't succeed is also a lot about price negotiations, or I might say, but it's more than price. It's about your focus must be about value that you expect to create by bringing two entities together. Now, what we see in the region is there are a couple of deals or a lot of deals which are happening, particularly in the banking sector, or I would say insurance, which are non-cash deals. When I mean non-cash deals, there's more like share swap, where A is acquiring B, issuing shares based on the value of what their shares are relative to the value of the other person's shares. And this kind of acquisitions are beginning to increase in the region, rather than saying someone is buying out based on paying cash to acquire businesses. It's a good sign, because at the end of the day, if these kind of currency that you have, particularly in listed entities, it is possible to do these deals. Now, when you come to listed entities, everything goes down to saying what are the multiples prevailing in the marketplace, whether you look at different multiples, not getting into valuation issues, but at the current moment, post-pandemic in March, most of the multiples corrected significantly. But let us say in the last 2 months, I would say August, post-August, I must say September through wherever we are, the multiples have started improving because there is a lot more market activity as compared to the shock that was delivered in March, where we saw the multiples decline quite substantially. We are now seeing deals being revived, which were in the making, and other deals where people see an opportunity to capture value, because at the end of the day, the price at which some of these deals are available today would not have been the case 6 months ago or 9 months ago. So people are seeing an opportunity to use this as a consolidation strategy, and we will see more activity coming back in the space. But I'd like to shift a little bit of conversation, because this is not all about what happens only in the listed environment. I want to dwell, with your permission, on a couple of areas. Like what we see is very large businesses that we know in Bahrain and in the region are a conglomerate of many individual businesses in different segments, if you like. Now, if the world were normal and you could sort of carry some of the more capital intensive businesses or perhaps some amount of loss making businesses, you could accommodate that in a group that you could have certain profit generating businesses being able to carry these loss making or less profitable businesses. But today, where we have got to, we've got to make some very intelligent choices, because some of the businesses that you may not have the ability or the management bandwidth to look after, and those small businesses don't have the scale that some of the larger competition have, you got to think of how do you exit some of these businesses. So M&A is not about only acquisition. M&A is also about divestiture. So if you believe that someone else is better equipped to undertake that business that you don't have core interest in, you got to consider it and capture value, because the more you let this drift, what we find is there comes a point when the value in that business that is left just disappears if attention is not paid to it. And we find that there are interested buyers, if you like, who are starting to aggregate these kind of businesses across the region. It's not to say which sector, it's sector agnostic. So people look at value opportunity now because of the markets of where they are. And there are interested buyers in different, they may not be able to buy a company necessarily, but they may be able to buy a division of a company relative to their needs. We are seeing some of these opportunities and some amount of capital that is being available for this one. But what I'm trying to get at is M&A needs to be considered as an important option for growth. When I say growth, there is a particular CEO survey that was run even as recent as the last quarter of 2020. And a lot of these CEOs were independently asked, saying what are the key things that they would be wanting to focus on for the future. Apart from the usual organic growth and cost reduction and so on, people talked of two things. One is a strategic alliance. The second is an M&A. Because almost 1/3 of those CEOs have now said M&A is a critical option for them for sustaining growth or maintaining profitability. And it's no longer what you might call, if the same survey was run a year ago, you would have less than 15% who would have said that this is important to them. Now, as you've seen, even in the business, just take a simple example of alliances. If you look at alliances, if you look at some of the restaurant businesses, if you didn't have an intermediary who is able to deliver the product to the customer's door, many businesses today would have been closed down. Now, alliances is necessary because each one is good at what they do, and some businesses attempt to do everything on their own, find it difficult to sustain. So you got to find either technologies or smarter alliances to be able to undertake the business more efficiently and effectively than sometimes you can do alone. Now, same thing, if you extend the difference between an alliance and an M&A is alliance is a company which is independent of this. They perform a set of activities that work in conjunction with the business that you do, that you can deliver value to your customers. Now, in an M&A, you say you can run the business better. You acquire a business, if you like, integrate that business into your operation, and you think your management team or others have a better idea of being able to extract value from the target. Or for the matter, you may have certain businesses that you are not best equipped to manage, and therefore you divest those businesses to others who may have an interest to acquire in the trade side. Now, I want to kind of quickly sort of run through saying where are things happening. 75% of the M&A deals in our region, or almost, when I say our region, I reckon I'm talking of the GCC, happens between Saudi and UAE, where there is a lot of regional and I would say national consolidation that is going on. And the rest of the GCC accounts for about 25% of the deal making. Now, there is capital coming in, but when I say capital coming in to undertake M&A, this capital is coming in at what they're prepared to sort of accept as risk, or what is the kind of return expectations they have. But ultimately, each is a different situation for a business. There is no one formula by which you can fix this. But what I would recommend is saying, when you look at today's cost of capital, many people think the interest rates have gone down. But interest rates going down is only in an international thinking. At local level, when you look at the credit risk and you look at the cost of funding that banks would always refer to in the financial terms, you're not going to get cheap money coming in. So the cost of equity, despite the interest rates going down, still remains high. And given the risk considerations, people expect returns, particularly for capital, to be made available for M&A deals. The cost of that risk is higher. But all I say is that it becomes important, pertinent in today's time to take a good look at the portfolio of businesses which have gone through a process over a period of time when it was built. Today, it's about time to choose, focus on a few, do that well, and maybe in the area that you are good at, look for acquisitions, regional presence across border. Thanks to technology and digital, customer acquisition today is not it was by physical presence. It can be done through various other means, as even banks are discovering competition that they never knew is coming their doorstep. It's not across the road or that are physically located here. We are seeing there will be a shift both in terms of how the customers are changing, as a result of which M&A becomes a necessary option. What are the key themes why this is happening? As I said, the digital transformation is a fact. The other thing is because the cost of capital and the fact that borrowing and money that is given to a corporate to be used across multiple businesses is not going to be easy as time goes by. There is pressure, as we all understand from our banking communities and others, that will be looking more closely at businesses and the underlying cash flows, not at group level, but at individual segment and division level. So there'll be more pressure to deconsolidate or divest and consolidate where you see opportunity. And essentially, this is preparing yourself for a better outcome, because although we would say the pandemic has caused some pain, but the pandemic no doubt provides you an opportunity. I would just stop here if you don't mind, and then take questions, because we can go on and on a topic like this. I recognize that. Thank you for the opportunity, but I'll stand by on Q&A.
Thank you, Ram. And we are open now for any question from the participants.
Somebody admitting somebody. بعد في واحد بعد. Judgment. Questions, dialogue, gentlemen.
Interaction.
Anybody? Hello. ده لازم تشوفون يدهم أو شيء ما تعرفون. ما يبين. Who wanting to participate? إيه. هيك عندك هني علي الطريق فوق. إيه. لو هكا فوق.
السلام عليكم.
عليكم السلام.
أخ علي الطريق، حط الكاميرا يا أخوي، شغل كاميرتك خلينا نشوفك.
أوكي، أعطني لحظة شوي بس أعطي لحظة برجع لك لحظة.
يلا هندس لك يوم.
هذه ما شربها.
هدى رضي.
زين.
So we have هدى رضي.
هدى. وين هدى؟
الو مرحبا.
هلا هدى، كيف حالك؟ شلونك؟
الحمد لله تمام، شو اخباركم؟
شو عليك؟ من زمان ما شفناش.
والله واقفين في الكورونا، شو نسوي؟
ما شاء الله عليك، انت دائما اكتف ومشاركه ودائما وناس على الخط.
حبيت اولا to thank you about this. حبيت اولا to thank you about
راح صوتك.
this مجلس. As I am very much interested in finance and I've attended several seminars in the past organized by CBB and other, especially during this pandemic. As you know, there is culture differences. Maybe merger and acquisition, it's happening in the past. And declaring Chapter 11, Chapter 10, or the bankruptcy we have difficulty in this part of the world as people are afraid from failure stigma. That's why I think it will be very difficult for any SMEs in Bahrain to go to the court and announce Chapter 11. It happened in the past, maybe with 2 entities like Arcapita and other entities. So what is the solution to go over the culture behavior towards Chapter 11? This is one. In Bahrain, we don't see much interest in merger and acquisition because everyone would like to have their own entity and to be dominant in their businesses. So this is another problem where I think because of the culture is not accepting this concept of having merger and acquisition and losing the power and losing the control of their businesses. And the other thing, which is more legal, even if you decide to proceed with Chapter 11, if only one creditor objects, the whole process will stop. So how can you all go over this issue? Because with the Bahraini bankruptcy law, if only one creditor objects, the whole process will stop, even if he or she is minority creditor. So how can we solve this issue? Thank you. And sorry for my prolonged question.
Thank you, Huda. I think, Dr. Jamil, if I pass the first and the third question to yourself, please.
شغل المايك. جميل.
شغل المايك.
شغل المايك. جميل. جميل العلوي.
اوكي. Press the button.
Unmute, ask unmute.
Okay.
Now I can. Now you allowed me to speak.
Yeah.
Well, thank you very much. Stigma. Well, there's probably some of that. As I said, there is maybe a reluctance of businesses to go to the court for reorganization. But don't forget, really, the primary reason that you go to the court for reorganizations is to seek protection from your creditors. So, you have to look at it this way. There are so many cases against me. I am being harassed. I am being exposed at the court. My assets are being subject to attachments and they are being dismembered. And this is being known to the community. This is being known to the market. So am I better off really enduring that or going to the court and seeking reorganization and getting protection from these creditors? So, and you also have to think of the other benefits that you would get from going to the court and seeking reorganization. But also you have to remember that if you don't do it, the law gives your creditors the right to apply for your reorganization. So maybe there come a stage when your creditors will probably not even go to the court and ask for you to be reorganized, but rather to be liquidated. The application is for liquidation. And the law very much, allow that to happen if the creditors choose to do that. The other point that you are mentioning, that if even when a creditor objects to the reorganization, then the organization stops and cannot proceed, that's not true. That's not what the law says. Whether to accept reorganization, to accept the opening of the proceedings for reorganization is a matter for the court. The court will have to decide, nothing to do with the objections of the creditors. Maybe all of them object, not only one. And the court believes that there is a chance, a reasonable chance for the debtor to be reorganized. Of course, usually the court would do that upon advice from a provisional trustee that they appoint. And if the court is satisfied, there is a reasonable chance for the entity to be revived, to be able to continue standing up on its feet and maybe continuing business, then the court will approve the commencement of the proceedings. And after you go through this process and you reach this process of having a reorganization plan, and the reorganization plan is presented to the creditors, then that will be subject to a vote. Creditors will be divided into classes, and each class will vote separately, and you don't really need a unanimous vote for a plan to go ahead. The court has the power to cram down the plan, even if there is objection to it from the creditors. When it is put to a vote, provided, of course, the court believes that there is a reasonable chance for the entity to be able to continue business, to stand up on its feet and continue business.
Thank you, Dr. Jamil. And I think on the third point that you have mentioned regarding that, how to affect the culture. This is simply what we are doing in Chamber. We are out there. We are, bringing in the awareness for the SMEs and for the large corporates, talking about the merger and acquisition, the governing laws, and what are the steps that they could go with, whether for merger and acquisition or the reorganization.
Allow me, Sousan, I would like Mr. Shakir. We've been discussing closely regarding about SME mergers and acquisitions introduction to the market of Bahrain. I think it's very important that we highlight this, which I think it's a coming up issue that we feel that it's important that we at least introduce it. By Shakir, for now, if you give some words about this.
Yeah, we are working very closely with the Bahrain Stock Exchange at the moment. We are trying to promote the. We know that the SMEs are having lots of difficulties.
This is the second question for Hada Radi, by the way.
Yeah. Tapping liquidities, because we know that most of these companies, the small companies, they have problems with the cash or the balance sheet, the cash flow. So they can always tap the liquidity from the capital markets, either being listed or to tap liquidity through the sukuk or bonds. And what we really need at the moment is just to create the public awareness of the importance of having these small companies to think about new ways.
Educate the market, educate the business community. This is something new, I think, in this organization, in this country.
Absolutely.
Yeah.
So this is the thing that we are doing at the moment. We are working on it. We are working very closely with Bahrain Stock Exchange, and hopefully in the coming few days, probably will come up with some event that encompass the practitioners, the market practitioners, to discuss this issue.
Thank you. Ali Al-Tarif.
Yes, السلام عليكم.
عليكم السلام.
مساك الله بالخير عمي وبشار، كيف حالك؟
هلا وغلا، كيف الحال؟ سامحنا على التأخير بس.
عزيز غالي. Thank you, Mr. Chairman, for giving me the opportunity. Thank you for BCCI and the panel and all speakers. My question is to Mr. Ramachandran from KPMG. I would like you to shed some light on the financial sector in Bahrain, basically NBB BISB takeover. First round was 72 fils for 1/3 of the bank. Then they went for another round for 117 fils. Do you think that this price is fair? Because after they bought it, the market crashed. The interest rate is low. I don't think they will be able to, but I leave that to you. Please give me a comment on that. Also, if you can let us know about KFH AUB takeover and BBK Ithmar takeover, and also GFH Khaliji, their sukuk CT1 60 million with a premium of 12.1 million BD. Thank you very much.
Ramachandran. Rama Chandran.
Just say Ram is okay.
Yes, Ram.
Yeah, okay. I mean, while I receive all your questions, I have to be conscious there are parts I can talk about and parts that it's not in public domain for me to be able to say. But let me answer those
confidential.
Yeah, I can answer the questions as best as I can. Let me start with the BISB deal that you said. The 72 fills is in public domain, as is the 117 fills that happen. But ultimately, if there is an acquisition being made, as might be the case here, where if you like, under the takeover code kind of regulations that it was, that NBB acquired a majority stake in BISB, there is a strategic value that's not in the public domain. Now, why did they pay 117 fills? I do not know. It's not for me to comment, but I'm sure if they paid only 17 fills on top of the book, on the face value, if you like, they would know that they have synergies that they can extract, whether it will come through cost optimization, better technology deployment, or better growth, because one is an Islamic bank, the other is more a conventional bank, customer acquisitions that happen, more deposit opportunities that they have. They, as a strategic buyer, will be able to say that they can derive value out of it over time. None of this can be put in the context of price being paid at a point in time, but over a period of time, which is why I mentioned during the conversation that the post-acquisition strategy is critical. It's not about the price you pay for doing the deal. So absolutely no question, while I can't get into specifics, or I would not even know some of those. Coming back to the other deals that you said, the AUB KFH deal, again, to the extent it is in public domain, it was again based on KFH making an offer based on a number of shares corresponding to the shares in AUB for an acquisition of a sizable stake. The deal was about to conclude, but it was in the final stages when COVID struck and the deal had to be kind of, called off. It doesn't mean the deal is dead. Who knows? It will be revived post, hopefully, the settling of the pandemic story. Because at the pandemic, you have to understand the bond markets fell, equity markets fell, value fell. Now they have to recalibrate the whole thing and bring the deal back. The deal is not dead as far as we know, other than saying, when will it revive? I do not know.
Thank you, Ram. For the benefit of the time, we do have other participants who have questions.
Sure.
And this main question is touches based on the financial institutions, why we would be more interested to touch base on the SMEs in this forum. Yes. We have Mahmoud iPad.
Abu Abdullah.
Okay, shall we move to Khalid Najibi?
So
Najibi.
Yeah, okay, let's move to Khalid Najibi.
نجيب يفتح. حياك ابو عبد الله، تفضل. جزاك الله بالخير.
Assalamu alaikum.
عليكم السلام.
Well, I'm glad to see the participation in our first Majlis, our first E.Majlis, as they say, during the pandemic. And inshallah, we promise always to improve based on your request. I had a minor comment on, first of all, I thank you, our esteemed speakers, Mr. Jamil and Ms. Al-Ali and Ram, yes, for their valuable insights. And I just wanted to highlight at the chamber that our main concern, as Sausan says, is the SMEs. And the bright side of the story is the reorganization comes as a last measure. Although it started in our session, our two panelists were talked about reorganization, but there is always a bright side of the story when we face challenges. Facing challenges, always there are opportunities. Opportunities, as Mr. Chairman mentioned, is either through merger, it could be inviting strategic partners, it is like inviting technical partners, creating JVs, with specialists. Reorganization, Bahrain, as Mr. Jamil mentioned, although we are new, but we have progressed quite advanced in MENA area. However, I think innovation is a key area that one can look at in terms of digital opportunities to minimize your cost, your overheads. I recently read a report on 50 biggest institutions in the top 500. Most of them, unfortunately, sadly, they're part of history. And the prime reason is that they did not react. They didn't change their business model. Key is to change your business model, whether it's go towards the digital or go through aligning yourself with strategic partners, but don't stay put. And as Mr. Jamil said, if your path is you have no choice but to reorganize, you have to do it at an early stage. Because once your quality of asset gets compromised, you will be at a disadvantage situation. So the key is try to be proactive as much as you can. And we are at the Chamber are always supportive to help give such advices. Thank you.
Thank you, Abdullah. Mahmoud?
Yes, Mr. Al-Khair, can you hear me now? Am I being here now?
Yes.
Mr. Al-Khair Jami'an, it's my first BCCI Majlis that I joined. It's really a pleasure meeting you all. I'm enjoying what I've so far heard. And I have just a couple of comments or questions. My question is to Samir, and indirectly, of course, maybe to the speakers. My question is exactly what is the role, of BCCI, in encouraging, and of course you have got the relevant committees like Southern's Committee, and sort of encouraging, let's just say the M&As. I mean, if we say we have an industry, and take an insurance that I've been part of for a while, that it's an obvious sort of, it's ready, for mergers, I mean, the ultimate objective is Bahrain and the economy of Bahrain, so it's an obvious sort of industry that we think, that, it's due, for mergers and acquisition. It's which will have a returns, much better sort of, to the shareholders and ultimately the country as well. Let me just give you another example. Take, this is something else. I know I'm switching from maybe a subject to another, but trying to cover everything that's crossing my mind. Now, two, I would really recommend, I mean, we hear a lot, every year, that the central bank announces 200-300 million dinars, of premium written, by all the insurance companies. Great. But what is do we know how much of this premium is actually leaving, the country, leaving, the area, this is not for maybe discussion now, I'm just saying this is worth looking at it, Let me give you another related example. Take the life insurance companies in many countries in the world, and all the countries of the world almost, other than maybe the Gulf, If you have a life insurance company, by law in a lot of countries, that you have to invest a good sort of part, portion, a percentage of that, what you collect, as a premium in that country. And I'm talking about the long-term life insurance. What I mean, let's say an education policy that you buy for your kid and you have to pay 50, 100 dinar per month for 20 years. This is the covers, okay, that I'm talking about. So as I said, okay, by law, and even Egypt and America and Japan, okay, I mean, by law, if you have an insurance company writing life, writing long-term life, then you're obliged to do that. Whereas we do not have this sort of here, okay, in Bahrain. I have put this question, okay, to, and you know, in a meeting, okay, to even the central bank a few years back, okay, and the answer is always, oh, there is no opportunities, okay, for, you know, for investment in Bahrain. But I'm saying, okay, that, so back to my original question, what is the role of is any role of a BCCI, okay, when you have got obvious cases that will contribute, okay, to the country, that you can have? Thank you.
Thank you very much. Khalid Najibi, can you please, if you don't mind, take this part on Bahrain Chamber's role?
So,
Or Sonia Janahi?
yeah. Okay, she's on.
Yeah, Sonia, you're on.
Thank you so much, Mr. Mahmoud, for your question. Just to recap, the committees have been established, 10 committees, sectorial committees, basically focusing on the non-oil sectors in Bahrain to ensure that we support the different 10 sectors, we ensure that we enhance the GDP and try to come up with creative ways to support each industry on its own. And this is why today you have 9 of the sectors not headed by board members, but headed by experts in the field. And they decide on who their members are in each committee. And jointly with the executive committee and the board, we set together Ma'al committees, all their action plans, which is annually reviewed and followed up and taken into perspective. Now, because of the pandemic situation, a lot of things changed. This, you know, the approach that the committees were taken slightly changed because their focus was primarily on making sure to sustain the businesses as much as possible. And this is why today Sausan is looking at the bankruptcy law, is looking at mergers and acquisitions to give institutions, specifically SMEs that today are in trouble, an approach that they can either reorganize their organization or basically, you know, close it down, take it to bankruptcy and start fresh. But we have to give them the approaches because we don't want them also to be in a situation that creditors are after them and they cannot progress in any way. Nevertheless, today the committees are all working on their new set of objectives because we also have new members that have recently joined about a month back. And before the end of the year, all these objectives will be published and we will notify the public all day. Now, all this information is available, by the way, on BCCI app and on the website. You can actually even read the minutes of each committee meeting. There's a brief, a summary of each committee meeting. And if you have ever any comments, any references, any suggestions, we have open lines. There are numbers for each committee, emails. You can always reach us and we would be happy to hear from you and every other BCCI member. I hope I answered this question.
Thank you very much. Thank you, Sonia. Do we have any further questions? Okay, I think we reached to the end of our session. Bianca, do you have anything to add?
Nothing to add, to be honest with you. I just want to thank you, Sausan, and to thank Dr. Jamil and everybody who participated in this session. And we hope to continue doing these awareness sessions to the public so people know and the practitioners in the market, they understand what are the new developments in the market, the new concepts in the market, so we can overcome the pandemic crisis. And hoping we see you in the coming future to discuss maybe other topics in relation of the financial sector. Thank you very much.
Great. Thank you very much. Thank you.
Thank you.